What's happening, guys? I hope you're all good and well and you've had a wicked week so far. So, first Confluence video of the series. And what is the Confluence series and why do I want to put a series of videos together? So, essentially, when we have a mechanical system or a trade plan or an approach, it's important that we have set rules. It's key that we need to have rules so we can stick to them and stay disciplined. Now, those rules are going to come from my data, your own refinements and experience, and the data that you take from your performance, from your testing, and then into your live trading. Okay, now having a fully mechanical trading plan without no logic or understanding to support that, meaning having a plan and just taking every single trade in every single market condition, that's not going to work over the long period of time. You need to have logic and understanding and marry that with a 4-hour system or an intraday system, or it might even be a lower time frame system. Whatever strategy you're using, there needs to be always a little bit of decision making involved. Okay, so in this video I'm going to be talking about higher time frame draws on liquidity. Okay, and when I say higher time frame draws on liquidity, it really is as simple as it sounds. It's understanding where liquidity lies and knowing that price will be drawn towards said liquidity points. Now, I've been talking about this for a long time. I actually recorded a video on inefficiency and efficient price action. I think it was one of the first videos I recorded as a mentor about 4 years ago. But as time has gone on, as I've developed and my understanding experience, so has my understanding of confluences and concepts. So how can we use these concepts, such as imbalance, such as understanding where liquidity is, swing highs, swing lows, equal lows, internal range liquidity, external range liquidity, along with OBs. Okay, understanding this combined with momentum and a 4-hour, 15-minute system, the system that we trade, this is only going to increase the quality of our setups. Okay, it's about quality over quantity. We don't need to be taking every single trade because the 4-hour gives us that specific scenario and the 15-minute sweeps some fractal liquidity. No, we need to build the bigger narrative. Okay, and that might mean sitting on your hands for a day or a week, or it might mean just like GU, for example, just waiting for price to develop, choosing another pair. We don't need to be trading every pair, every day, every session. What we want to be trying to build for yourself as well is looking for clean price action with clean market conditions where we can see clear liquidity objectives. And I'm going to talk you through loads of examples in this video. Okay, so in terms of what are liquidity objectives and what do we want to be looking for and on what time frame? Now, the same applies like all concepts for all time frames. Okay, time and price theory, it's the same thing. Okay, you just have less candles. The higher the time frames, there you go up. But that gives you more information. Okay, because it's took longer for those candles to print and for that framework to be built. So if we're trying to understand where price is going to next by looking at the high time frames, the weekly, which is essentially what you should be looking at on a Sunday or a Monday, and then on a daily basis, looking at the daily time frame and identifying where are these draws on liquidity going to be, and then combining that with our trading plan, our 4-hour, 15-minute system. When we do that, it's going to increase the quality and the win rate of the trades that we're taking. If it's not clear and it's not jump out, we simply don't need to trade that. A lot of last year's trades were purely from sticking to the plan, fully mechanical, 100%. Now, a lot of trades were taken that didn't need to be taken. Now, that's what's so important to do an in-depth annual review, or to do your weekly ASR to understand what lessons can you take from 1 year to the next, or from 1 week to the next, or from 1 day into the next. And one of the big takeaways, the key takeaways for me last year was taking low quality setups on occasions when I didn't need to be in the market because perhaps the high time frames wasn't clear in terms of the narrative, the intention, the draw on liquidity, where it's going to, or I think or anticipating it's going to go next. Now, I don't want to be giving back percentage this year, unnecessary percentage. We don't need to be doing that. Okay, as investors, we need to learn to sit on our hands. Now, I'm sure by now all of you are starting to get to, if not already, a level where you're understanding that patience is key. And you don't need to trade every day and sit at your desk all day long. So I'm going to get into some nitty-gritty stuff now. We're going to start talking and look at some examples of how we can start to use and understand high time frame draws on liquidity, what they look like, and how we can use them with that intraday system, because this is important for us going into the new continuation model, which is a video that I'll be releasing tomorrow, and hopefully it will help you understand a little bit more today essentially what we want to be looking for when we're looking at the daily chart before we entertain looking at the new continuation model. Okay, so when we're looking at draws on liquidity, right, we want to be looking for several things. Okay, so we want to be looking for, let me just write this out for you. We want to be looking for ERL, so external range liquidity, which is swing highs and swing lows. Okay, obviously in a pro trend environment, we want to be aiming, if we're bullish, for the swing high. If we're in a bearish market condition and a bear trend, then the objective will be to target the swing low. So understanding just external range liquidity, EOF and trend, that's going to help you spot it and understand it. Okay, so old swing highs and lows, that's where liquidity is resting. Okay, so that will be a draw on liquidity. Price will gravitate towards these areas. Okay, areas of imbalance or inefficiency or a fair value gap, as YouTube and ICT traders call it. All the same stuff. Now, I'll show you some examples again in detail, but just for now, we're looking at what is a high time frame draw on liquidity, as in where should we be looking and what does it look like. Okay, all of these draws on liquidity, price will gravitate towards. Now, it will gravitate towards it in different ways depending on the market conditions. If we're in a bull trend and we're on a continuation phase, likelihood is going to be external range liquidity, a swing high or a swing low that price is going to be gunning for. Now, if we have that understanding in our mind on a daily or on the weekly chart, then when we're looking at our 4 hour and 50-minute system, then we know that we want to be ideally positioning ourselves in line with that draw on liquidity in that direction, so it's clear. Now, we're not always going to have clear draws on liquidity that are obvious and jump out, okay, and that's fine. That means that the likelihood is the quality of the setup isn't going to be great, or the momentum in the market is consolidating, or it's range bound, which is fine. This is when we sit on our hands, okay? So what else do we have? Liquidity pools. Now, equal highs, equal lows, no different to what we'd be looking at on an intraday time frame, a 15-minute price chart, okay? OBs, or supply and demand zones, all the same stuff, right? Again, a lot of this stuff will all be around the same sort of area. They're all high value areas on a price chart, okay? Whether it's an area of imbalance, we know that it's usually resting above or below a POI or an order block, an OB. Swing highs, liquidity, we know that's external range liquidity. That will likely be above that or below that will be imbalance because of momentum. So understanding where these areas are and how we can plot them on the chart and how we can train our eyes to see them, again, when we pair that with our intraday trade system, then that's going to help the quality of our setups and increase our win rate. Okay? Now, it's important to know that there's two types of draws on liquidity. Now, we've got the long-term objectives of price, so these here, and also short-term objectives, which is going to help us more so with the continuation model, and also just understanding and helping us to anticipate what the next daily candle is going to look like. So, rebalancing, you must have heard me mention this quite a lot, where we see price rebalance. I'll show you some examples in a moment, and then we see a continuation. It takes out the previous daily high or low. Now that's going to be an important part of the new continuation model, okay? Looking at daily open and the daily close. Again, that's also going to be an important part. Now, I will touch on that, but I'm not going to go too deep into it because we don't really need to at this point. That's going to be more around the video for continuations. Okay, but understanding how we can build a strong high time frame bias using and understanding high time frame draws on liquidity will only help you progress and your ROI as well. Okay, so let's start with some examples that I've already drew out on a chart. Now, I didn't have to spend a long time finding these guys because they are there in front of us every day, every week, every month. Now, it doesn't mean because they're there every day we can trade it or we have to trade it, but you see it, your eyes will see it. It's the market, it's how it's printed. Now, the market wants to be efficient, okay? Now, when I say efficient, what do I mean? Well, if we're looking at this weekly chart now on EU, right? This bit of price action here, right? We can see, if we're looking at each daily candle, what's happening? The wick's going up, we trade down, then we take out the high. The next candle, we trade down, this is inside bar, don't quite take out the high. We trade down, then we take out the high. Again, candle opens, we trade down, take out the high, leaving no gaps of inefficiency. This is how the market wants to be. So when we see volume like this, or like this, or like this, or like this, on daily and weekly closes, this is showing us momentum. Now, price will gravitate towards these areas because the market doesn't want to be imbalanced or inefficient. The market wants to be efficient. So already understanding where these areas of imbalance or these fair value gaps are on the daily and the weekly time frame, this is going to help us understand where price is likely or where we can anticipate price to go to next. Okay, so let's look at some examples on the daily chart. Okay, so this is the sort of thing we want to be looking for. Okay, let's have a look at what we're seeing around here. Okay, because understanding on the weekly chart, of course, we've got less candles, so we're going to see less jump out draws on liquidity. However, that's more for sort of your overall bigger picture objectives, the weekly time frame. The daily time frame is where we're going to be using this more so. 4H as well, okay, but that's a topic for another day, reaction points. But the same logic and understanding applies. Like I said, it's time and price, it's all the same stuff. So what we need to understand is when we're looking for draws on liquidity, it's going to help us understand, are we going to be looking for continuations towards a draw on liquidity, or have we hit a liquidity objective? Because if we're trading towards and we've got a clear liquidity objective, whether that be a swing high like we're seeing here, then we know that we want to be looking for buys. We want to be looking for longs, ideally in line with this objective for price. Okay, we can see we've got a swing high, a swing low, a swing high, a swing low. The expectation is to put in a higher high. So with that in mind, the weekly objective here is to take out this high if we're going to continue structurally bullish, right? So it's going to help us understand when we get here whether we can take reversals or not. Okay, because taking reversals on a continuation leg on any time frame doesn't make sense. Okay, so it's going to help us understand where we're likely to see continuations of momentum, and when we get to these liquidity points, when we're going to see reversals and reactions away. So let's start looking at some examples on the daily chart. Okay, I've I've marked it up so it'll look a little bit messy, but it's only because I want to show you exactly what I'm looking at and how we see day in, day out draws on liquidity, short term and long term, play out, and how we can see and put that together with our 4-hour and 50-minute system to help our edge and the quality of our setups we're taking. Okay, it's important to note that we really need to be focusing on the open and the closes. Okay, whilst a daily candle may be halfway in motion during New York, we don't know what the actual information is going to look like until that daily or that weekly candle has closed. Okay, so it's important for us to understand that when we're trying to build that narrative of where prices or where we're anticipating price to go to next. Okay, so let's drop down to daily chart and let's have a look at some examples. Okay, now I'm going to go back to July, okay, and I'm going to talk you through this price action, all of it, and the annotations so you can understand it, okay? So we've covered what some of the liquidity objectives and draws on liquidity are, okay? That's imbalance, inefficient price action, like here, swing highs, swing lows, equal highs, equal lows, and how we can, again, pair this with our 4 hour and 15-minute system. Okay, so let's look at this bit of price action here. Okay, so we can see that we've got some equal lows, right? Price, I'm not going to focus on this bit of price action here, right? Focus on what happens next. We can see price takes out this liquidity, okay? Then we see a correction. Now, what do we see happen? Now, this here, it's just a consolidation. So this is where the objective for price isn't clear. But you already know this, because this price action here, we wouldn't be trading this. We may take a short here, perhaps, impulse, correction, continuation, but the likelihood is this price action here, we wouldn't be taking. We wouldn't be trading it. We'd probably be looking at a different pair. So when the objective isn't clear, then again, understanding trading ranges and consolidation, phases of the market, we already know to stay out of that price action. But I want to focus on what we're seeing up here. Okay, so what happens? Price comes all the way back up. It rebalances price. It reacts to this wick here. Rebalances. Now, it doesn't have to always fill all in balance, guys. That's really important to understand. Okay, market doesn't have to do anything. But we can see that price rebalances. Okay, so we've had a draw on buy side. So now we've had a draw on buy side. This is when we now should anticipate the market to start tackling sell side. So where are our sell side objectives? So we can see that we've got a bunch of liquidity here and we've got swing low. So price is going to gravitate towards these areas. Okay, so these yellow circles, these are really important to understand. I've highlighted them because this is going to help us, and this is a key and important bit of criteria for when we're looking for continuations in general, but more so the new continuation model, because this is just structure on a lower time frame. Okay, when we see a wick, we see the daily close down here. Let me just zoom in a little bit. So we see this big bearish daily candle. It closes. It opens. The next day, we see price push up. It rebalances. So this would be like a 4 hour retracement. And then we see a continuation. Okay, with momentum. Now, why are we seeing momentum? Because price is gravitating away from a buy side draw on liquidity towards the next sell side draw on liquidity. Because that's what the market does. The market will tackle buy side, then it will attack sell side. Buy side, then sell side. Now, understanding how to read price action, knowing that alone isn't just going to help you be profitable. That's why you have to study the markets, find an edge, understand structure, understand how manipulation, trading ranges, all the stuff that I teach you. But this is why we see this momentum, because we have impulse, correction, continuation. That's the phases of the market. That's how the market moves. That's how we want it to move in a trending market. Okay? But what we won't always see is we won't always see a retracement into premium or discount. So sometimes you might see like a daily candle like so, excuse the drawing, and you might see the next daily candle, just get a box and draw it, make more sense. Okay, then what we might see the next day is something like that, where we see small manipulation. Now this pullback on the daily chart, this wick to the upside, it can happen in New York, it can happen in London, it can go a little bit higher, or we could see something like this, where we see a deeper pullback. Now, on the 4 hour, this would be a pullback into premium, which would be our prime location for looking for continuations. Now, understanding where liquidity is, where the next draw on liquidity is, this is going to help us be able to take continuations without the need for a deep pullback into premium discount. Now, I'm not going to go too much in detail and touch on the 4 hour. That's a video on itself for tomorrow. But just understand what I'm teaching you, what I'm talking about here. Okay, we have the daily close, opens at the same price unless there's a gap due to overnight fundamentals. We see manipulation, and then we see continuation. Okay, so understanding this is going to help us position ourselves and anticipate what the next candle is going to be closing, or what the next candle is going to look like. Okay, so let me just get rid of that now, and we'll start looking at some of these examples of short-term and long-term objectives. So we've got price pulling back, right? We've got a correction, it comes back, it rebalances all of this inefficient price action. Then we see momentum away. We see price push down. I'm just going to talk through it as I'm looking. Okay. We see a big bearish engulfing candle. We see the daily close. We see small manipulation. Okay. When I say manipulation, that is rebalance. Rebalancing on the daily time frame. This wick on the 15-minute may be an Asian sweep. It may be a run on buy side, which is at entry. So understanding what it looks like on the daily time frame is going to help us anticipate what it's going to look like on the 15-minute. It's going to help us anticipate what the next close is going to look like. Okay, so we have, again, another strong bearish candle. Now, we haven't taken any liquidity here, right? So we've still got these lows, and we've got this external range liquidity, this swing low. So what do we see happen now? We see a bit more of a correction. Okay, rebalances some of this inefficient price action, then we see momentum again. Now again, this here may be a pullback on the 4 hour into premium, which would give us an opportunity to short. But if we look at the next candle, we've got a big bearish candle. We have the daily close, the next daily open, small manipulation, and then a continuation. Now again, this is heavy momentum that is being drawn to this liquidity point, this external range swing low. Okay, now understanding that this is a strong momentum candle, heavy momentum, this is one of the confluences or one of the criteria that we need to see when we're looking at the new continuation model. We don't want to be looking at a new continuation model with price action like this or price action like this. Absolutely not. Okay, we want it to be clean. So I'll be more specific in tomorrow's video around the actual model and what we want the 4 hour to look like and the 15-minute. But again, it's understanding that when we have heavy momentum towards a clear objective, sometimes we don't get pullbacks into premium or discount of the range, depending whether we're in a bull trend or a bear trend. So this is understanding this is going to help us be able to take advantage of continuations following the institutional order flow and the institutional momentum. Okay. So the next candle, what do we see? Same thing. We haven't hit any liquidity point yet, and we're reacting to this OB, but it didn't break anything, and it's against momentum trend. So this isn't an OB. This is just like a catalyst for some form of reaction, which didn't give much, which is fine. So the next candle, again, we haven't reached any liquidity objective yet. So what do we see? We see the same thing happen. We see the daily close, we see open, upside manipulation, then we see another bearish momentum, heavy momentum candle that takes out this liquidity point. Now, what happens when we hit this liquidity point? Price stops, it reacts, and we start to see price gravitate away from it. Now, this would be a good indication for us when we can start to look for counter trend opportunities because we've taken liquidity. Now price is going to want to look for the opposing side of the market. We've taken sell side, so price is going to want to now look for, we've taken sell side, price is now going to want to look for buy side. So again, in this bit of price action here, it's messy, it's clean. There may not be any clear opportunities on the 4 hour. This may be a week or two where we're sitting out of EU, okay? But what do we see happen? We see range bound price action. It runs sell side after rebalancing. Here. It takes sell side. Then what happens after that? Price pulls back. So we've had our impulse, our correction. Price comes back up to this level and it rebalances price completely. Okay, notice how we don't close above it. Now, that's really important. Sometimes you will get a body close and it will still be respected, but 95% of the time, when we're seeing daily closes respect areas of imbalance, this is going to give us the understanding that a continuation, as in an expansion away from that area, is going to hold. So just think about that, okay? So, buy side objective, reaction, complete. What's going to happen next? Where's the liquidity? Where's the next drawn liquidity? Well, we're in a bear trend, so it will be the swing low. So what do we see happen? We see big bearish candle that leaves imbalance. Price shows a correction, hits this OB, this imbalance, an example of where we see OBs and imbalance together as objectives. And then what do we see happen after that? We see a big, strong bearish candle. Now again, look at the momentum that kicks in. Why is the momentum kicking in? It's because it's been drawn to the next liquidity point. So again, we see the daily close, then we see open, we see upside manipulation, which again, this little wick here, which is 8-10 pips, will be an intraday run on liquidity. Remember, the intraday time frames, whether it's the 1 hour, whether it's the 15-minute or the 5-minute, is going to show manipulation, just the same in the same way as the daily, whether that be rebalancing of price or whether that be a sweep of a session high or low or a liquidity pool, time and price, it's all the same stuff. We just use intraday for entries or the lower time frames for entries. Okay, so again, we're seeing this momentum to the downside. So here, if I've seen this daily close, then I would be looking for continuations, and I'd be happy to look for a continuation using the new model. If price doesn't pull back into premium, let's say of the 4 hour range, this daily candle would likely be the 4 hour range using our fractals. So this is where we could take advantage because again, price is being drawn to the next sell side objective. Buy side rebalanced, sell side objective met. And again, we just see the momentum continue, right? So in this scenario, when we've got momentum like so, we can look for continuations as long as we have clear liquidity objectives. Now, if we look at this bit of price action here and look left, there's no clear liquidity objectives without looking probably at the monthly time frame. So this is where I wouldn't be looking for continuations with the new model. By all means, we can wait for a pullback using normal intent, but I want to only be looking for continuation with the new model when we have a clear objective that we're trading towards. Okay, that's what continuation is. Okay, it's continuing with that momentum, following that institutional volume. Okay, I hope this is making sense so far. Okay, and please, any feedback, questions after you've watched this, drop me a message, and I'll answer any questions you've got. What I'm trying to do is get all of the logic and understanding from my 6-7 years market experience and trying to share that with you. So in hope that will help you elevate as a trader this year to a new level. Okay. Okay, so let's move on to this next bit of price action. Okay, we see price obviously take out this low, it reacts to something, and we see price move away. Okay, price rebalances, then we see price fail to put in a new low. So I've mentioned this on, I think it was a call last week. I've mentioned it quite a lot. But when we see a failed swing, this is a reversal sign. It's a clear reversal sign. Price is failing to put in a new low, and this is a failed lower high. Okay, it's failed to put in a new low. So again, just another reversal sign, just another bit of information for you to take and look at when you're doing your analysis. So let's go back to liquidity objectives, right? So again, this price action here, not too clear, right? Probably wouldn't be trading it, or probably be cautious trading it when we're looking at the 4H. So in terms of the liquidity objective, once I've seen this failed swing and we start to see momentum like so, this is where we can understand about price may be gravitating towards this high. Okay, this is a swing high on a lower time frame, perhaps the 4 hour or the 1 hour. So what do we see happen? So again, these yellow circles are our short-term objectives where we see price rebalance, take out the previous day's low. This is what's going to help us understanding where we can take the continuations. Okay, so what do we see here? Okay, let's look at this price action. We see this strong after this range bound price action. We see price take out this liquidity of this previous low. See here, this would have been like a medium time frame swing, strong bullish close. Now we've got an objective we can work towards. What do we see? So we see daily close, downside manipulation. This may have been New York because it's a bit more of a deeper pullback. And again, this may have been where we're seeing price return to premium or discount of our 4 hour range. And then we see take out the previous daily high. Remember, the expectation, the objective is still here. That's where price is likely to be drawn to. So what would we anticipate the next candle or series of candles on the daily to look like? Bullish closes until we get here. What do we see next? We see the daily, this doji, we see it close, we see downside manipulation, then it takes out the previous daily high with momentum. Again, the objective is still clear. We haven't hit it yet. So what do we see? The following day, we see the daily close, downside manipulation, then we reach our objective. What happens after we reach our objective? We see a reaction and we retrace quite hard, quite aggressively away from that area. Again, this will help us understand where we can take higher quality reversals or counter trend trades. When we react to the draw on liquidity, that's when we want to be looking for counter trend trades, or certainly where we want to be opening up to the idea of trading against the trend, 4 hour daily. Because we understand that price is then likely to seek the opposing side of the market. We've taken buy side, sell side is likely to be targeted next. Okay? So we see a pullback, then we see mitigation of something like in this wick, then we see a huge, this is Friday the 4th of November, so this would have been NFP volume. Okay? But again, we've now started to see structure change to bullish. So we want to be now looking for continuations to the upside until we start to react and hit buy side draws again, whether that's areas of imbalance on the weekly, whether it's external range liquidity, swing highs, swing lows, or whether it's clear equal highs, equal lows, or liquidity pools. Okay, understanding this is going to help you frame up better quality trades. So we see this NFP candle, this close on Friday, 4th November. We see Monday, open, downside manipulation, continuation that takes out the previous daily high. This is the next objective. Okay, there's no imbalance here, there's no equal highs, so this swing high, EOF, this is expectational order flow is to take out this high because we're bullish. Yeah, taking out the swing high, swing low, this is the high low to cause this break of structure, right? So what do we see happen after this? We see price again open, downside manipulation. What happens? We rebalance again and we take out the high, then we retrace. Okay, and then we see more volume to the upside. Now this is where we want to look left, because it's not just new swing highs and swing lows, it's also previous swings, because there's going to be market makers, market movers, whatever you want to call, institutional funds, hedge funds, anyone who moves the market, right? They're going to be having their there's going to be stops here. They're going to be trailing their positions. They're going to have orders as well as buy and sell stops on old highs and lows. So again, we can look at these when we start to see, because on the weekly time frame, all of these highs will just be internal range liquidity. So we can once we start to see them attacked, we likely see them all start to get attacked, especially when we see structure and momentum change. Okay, so let's go back to this bit of price action. Okay, so we see the objective met, right? So where's the next objective? Well, we need to look left. We've got imbalance here, and we've got imbalance here, an old swing high, an old swing high here. So let's see how price reacts to these areas. Okay, so we see the daily close. What do we see? Downside manipulation, which will be a retracement. Then we'll be looking for entry to go long. It really is as simple as that, guys. What you've got to do is just look at the daily chart, circle it, then go to the 4 hour and go to 15 minute and see what this looks like. See what this wick looks like on the 15 minute. See if it's an Asia sweep. See if it's a run on equal lows on a kill zone in London or New York kill zone. This is what we want to be looking for. It's what I want you to start training your eyes to see. Okay? So we see downside manipulation. Where's price heading to? Well, here. Sold swing high. This is where we've got internal range or external range liquidity if you're looking on the daily, right? Price doesn't quite make it. Stalls a little bit. We see price come back, rebalance price, then we see a continuation. Now, again, this is an example. Price isn't always going to do this. I wish it did. We'd all be millionaires by now. But this is how understanding market conditions and whether we should be trading on that said day or not is important, because we don't need to be trading every day. What I want you to be understanding is what's jump out and what's not. Where is a clear objective? What market is clear, what market is not? When the market's objectives of the draws on liquidity are clear, this is where the best things happen, guys, right? If you don't believe me, you have to simply just go back over data and look for yourselves. Look at your performance last year. Drop down to the daily chart. Look at these draws on liquidity. It's a no-brainer. You'll see that you'll get better results when you're trading in line with the expectation of draws on liquidity using the high time frames paired with 4H and 15-minute system. Okay, so what do we see? We see price take out the swing high with this big wick. What else does it do? It rebalances price. Doesn't close above it, right? So what can we expect after that? A retracement. So this again would be a scenario where we could be looking for counter trend trades, and we'll be happy to look for a reversal because we've taken high time frame buy side. So price is now going to want to seek sell side, and look what it does. Price trades back down. It rebalances price to the pip. Then what do we see? A continuation of the trend and the momentum. So looking above, other than this swing high, what else have we got? We've got this old high to think about, okay? But we'll look at that afterwards, right? Let's go back to this bit of price action, right? We rebalance. We see price push up, downside manipulation, takes out previous daily high. Then what do we see happen? We don't quite take out the high, which is fine. Now we see a pullback, then we take out that high. Now this is fundamentals. This looks like fundamentals. So that's fine. We may be trading this. It may have been an opportunity there. There may not have been. Okay, but the point being is the objective is met. Buy side gets taken. What happens after that? We retrace and we rebalance price. But what happens? We don't close below. So understanding this, that we've pulled back, we've rebalanced price, we're in a bull trend, we've got clear buy side objectives. This is where, if we see this close, we want to be only focusing on continuations. We don't want to be looking for sells here at all until the next buy side objective is met. Okay, this really is going to increase your win rate and the quality of your setups, and you'll see that throughout Q1. So I look forward to seeing your results and look forward to seeing how much of a better trader you will become over the next 6 to 12 months just by understanding and studying some of these concepts that I'm going to be teaching you and some of these observations and understandings, okay? And you will need to study them. Just because I'll be sharing them every day, like I have been for the last couple of months, but hopefully now you've got a better understanding after watching this video. You'll be able to start making your own calls on price. You may want to hold trade a little bit longer. You may want to cut your trade a little bit shorter. It's going to help you understand overall what the expectation of price is likely to do next. Okay, let's carry on. What do we see? We see price take out this high. Price then downside manipulation, rebalances, and then we have price this wick. Now, what's it reacting to? Look left. It's buy to sell. If I drag this up here, buy side objective. What happens now? Price is going to want to rebalance or tackle sell side. Now, there's nothing clear here. There's no clear imbalance. There's no clear sell side taken, which is fine. It's not always going to happen, but 95% of the time it's going to happen. So we see a pullback. Then what do we see? We see momentum heading towards our next area of liquidity, our next draw on liquidity. Now again, we've got this old swing high. We've also got this imbalance. We've got equal highs here. So this area here is where price is likely to be drawn towards. We're in a bull trend. Momentum is to the upside. So this is what we want to be looking for in terms of trading with that institutional volume. Okay. So we see price range move around a little bit, sideways, consolidation. Again, it may be conditions where we just don't want to trade. It may be where we do trade and we take a couple of losses. That's trading. You won't get away from that. But again, what do we see happen? Price then shows momentum to the upside. Okay, we react to this area here. Now, we close above the imbalance, but what don't we close above? We've got the OB. So if I just draw a line, you can see we react to this OB. What happens after that? We're drawn to sell side imbalance. What happens after that? We have a range, but the logic is still there. Price then trades higher, doesn't quite take out the high. Price trades down quite aggressively. This will be NFP here. Again, look at the date at the bottom, Friday the 6th, first Friday of the month, all the time. We see it retrace, and then what do we see happen? We see momentum kick in. Now, get rid of some of this. Look left. What have we got in terms of momentum? Well, we've got this swing high, this old swing high. We've got these equal highs, and we've got buy side imbalance above price. So these are the objectives that we want to be looking to trade towards. Okay, doesn't mean you have to hold your trade to these objectives. Some of them are quite far away. That's something for the swing trading course. But for our intraday system, understanding our short-term and our long-term objectives, it's only going to, again, build that confidence in taking higher quality setups, right? So what do we see happen? We see NFP candle again. Monday, we see daily close, small manipulation to the downside, expansion. Okay, another impulsive expansionary candle. Now, again, this is where I would be looking to take new model continuations because we've seen intent, we've seen heavy volume, we've got equal highs, we've got old liquidity to the left, we've taken liquidity down here. If we just look, NFP, taking liquidity, hit this range. So if I seen this daily close on Monday, this is where I would be wanting and happy to look for new model continuations without the need for a retrace. Now, this may happen in Asia, it may happen in London, it may happen in New York, but if it happens in a kill zone that I'm present and available to trade, then I will take the trade and take the opportunity. Okay? Let's continue. A few more. I don't want to go on too much without boring you. But I want you to also understand that this happens over and over. So you can start to train your eyes and then study it and apply it yourself. Okay, so we reach a buy-side objective, we take out liquidity, we retrace. What do we see? We see price respect this imbalance, and then price then, albeit quite messy and correctively, trades into this wick, this buy to sell. Then we see, again, this is not the greatest of price action, but price does take out this liquidity. Takes out this buy side, and it also rebalances with no close. So now we've run buy side, what can we expect to see next? Don't need to tell you, right? We can expect to see a high time frame draw on sell side. So this is where we would want to be looking at positioning ourselves for potential reversals or counter trend opportunities. Okay, so we see this aggressive run in, aggressive run out. Look what we see. We see daily close, upside manipulation, heavy momentum. Upside manipulation, heavy momentum. Now, what have we got here? Imbalance. Notice how price respects this level. If I just draw a line, react to this imbalance here. We have quite range-bound price action. Again, this will more than likely be unfavourable conditions where we probably would be sitting on our hands. And then what we see is price trade into this demand or this OB. Again, it's another draw on liquidity. Okay, OBs, imbalance, liquidity, swings, equal highs, equal lows. Okay, what happens next? Well, we can see that we have, again, manipulation, quite a large candle, so more than likely fundamentally driven. We take out sell side. So look what happens after this. Now we see a bullish close, downside manipulation, takes out the previous daily high. Next candle, daily close, downside manipulation, takes out the previous daily high. So we've got continuation, 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 until we get to what? This next area of imbalance. What happens? Prices react into this area. Now, understanding again where these areas are, this would prevent us from taking more continuations, because if we know that price has closed and respected buy side draw on liquidity, then we can then assume that price is going to tackle the opposing side of the market, right? So on the 4 hour, this may look like a break, a clean break, where we've got, I don't know, liquidity sweep, neutral bias, but on the daily chart, we'll be looking at this, or I certainly would be looking at this and thinking, this big rejection here, we're likely now to see a retracement into sell side. And what do we see? We see price trade down, so continuation of reversal opportunities, trades down into this area of imbalance, this sell side gap. Then we see a continuation of that bullish momentum. Okay, let's continue. So we see a reaction, no close, followed by a bullish candle. Okay, small manipulation to the downside, another bullish candle. Remember, swing high here on a 4 hour, and high time frame swing highs here, like true swings, weekly swings here, right? So we can trade with this intention until we get there. Now just imagine how many opportunities we can see, we can take advantage of in these, just by understanding this alone. We're going to be on the right side of the market so much more than we were last year. And I've put a lot of hard work into studying what areas I need to work on and what areas I perhaps didn't perform as well. And this was one of them. So this isn't just for me to teach you, this is for me, for myself. And everything that I understand, do, trade, can teach, I will. That's my job. That's what you pay me for. So to say I'm excited about this year is an understatement, guys. I really do feel this is the year where I'm personally going to be leveling up to a level which I would only ever imagine, and I only want the same thing for all of you as well. Okay, so again, go back to this bit of price action. coming to the end of the video now, guys. Hope it hasn't gone on for too long. We see bullish candle. Okay, another bullish candle. Don't take out objective. Bit of a range. Price trades back down. What do we see? It rebalances. No close. So we see continuation to the upside again. Daily close. Downside manipulation. Takes out this high. Opportunity. Trading towards this. Price then doesn't take out this high, but we see that structure is bullish. So price trades back into this demand or this wick down here, and then we see this bullish daily close, right? Knowing that we've got this high as our near side short-term objective, but this as our larger, longer-term objective. Here we have daily close, downside manipulation, buy. Objective not met yet. Daily close, downside manipulation, longs, right? We hit this point, what happens? We reject it a few times, we range, and then we see aggression away from that area. Okay? Again, understanding where draws on liquidity are on the high time frames, on the weekly and the daily, we're going to be able to take safe counter trend reversals. It really is that simple, guys. It probably doesn't seem simple, but it is. It's understanding when to stay in the market and when we're able to be a bit more aggressive and trade against momentum after large liquidity runs, okay? And then we see this retracement, right? And again, if we're seeing here, we see that like structure on the 4-hour would have shifted here, and we can trade reversals. We can trade with this momentum. We see downside manipulation, upside manipulation, bearish close, upside manipulation, bearish close, upside manipulation, bearish close, upside manipulation, bearish close. What happens? Price comes into this area of imbalance. Now, this here, all this is, this retracement, this, I've just marked here, would be a weekly continuation phase. This will be a weekly correction. Now, the next phase will be the next weekly continuation to take out this external liquidity, okay? The long-term objective. So, look at how many times we reject this area. Price is efficient. Remember, price wants to be efficient. If we look here, price is just the candles touch each other. There's no areas of imbalance. What happens? We bounce off of it several times. Okay, ranging price action. I remember it quite clearly. And then what do we see? Big manipulation. A big bullish close. Right, expansionary candle. Okay. What do we see then? Price comes down, respects sell side. Now, with this in mind, looking at this bit of price action here, this is the clear objective. Okay, this is all fairly efficient, other than, but it is. There's a tiny area of buy side imbalance here, but not enough for it to be something I want to be looking for in terms of a target for an objective. So we can look for longs with confidence that price is going to get here. So what do we see after this rebalancing of price? We see bullish candle. We see daily close, downside manipulation, takes out previous high. Bullish close, downside manipulation, takes out previous daily high. Big bullish expansionary candle. React to something here, this buy to sell candle. Then we see a bit of a messy correction. But look what happens again. We reject this imbalance, sell side imbalance, several times. Then we have a close below. Again, like I say, this doesn't happen often, but it does sometimes. And this is an example where it does. But what happens after this? We see strong bullish close. Then following that on Friday, which would be NFP again, we see a strong bullish momentum candle. Now, this would then signal that we are clearly shifting back to structural, to bullish on the 4-hour time frame. So we can then look for continuations. With the expectation, price is going to take out this high. So what can we expect the next candles look like? We can expect some downside manipulation intraday. Then we can expect or anticipate it to take out the previous daily high. Downside manipulation takes out previous daily high. Another strong bullish candle, hasn't met any liquidity objective. Short-term liquidity objective would be this swing high here, and this overall is the larger objective. So what happens with the next candle? Downside manipulation takes out the high. It's a doji, that's more than likely because we're reacting to this high. So see what happens next. Objective complete. Now, imagine if you got into a continuation knowing that this is the objective, and again, the swing trading course is going to help you capitalize on these larger moves. There's going to be a lot of understanding, which is exactly the same in terms of how we're going to pick our targets, how we're going to frame up our trade ideas with the swing trading approach. But understanding short-term rebalancing, taking out previous day highs, and then the long-term objectives, so external range liquidity, buy-side, sell-side imbalance, the market taking the opposing side once it's reached the objective, it's only going to help increase all of your trading performance, guys. I'm aware I've gone on quite a bit today. I've gone on quite a lot longer than I expected, but I'd rather have more detail crammed into the video so you can go over it a few times with some notes, and then you can fire any questions at me if you need to. I hope that you've taken some value away. I'd appreciate it if you drop me some reactions so I know you're watching and you're understanding. And any questions, feel free to drop me a message, guys. I hope you have a wicked rest of your day, evening, and I'll catch you tomorrow. Peace.